traders, welcome to the Dosh Trader morning call video for Tuesday, November 24th. Apologize for the voice, I'm a little bit under the weather, but I want to get this video out to you. We had a little bit of a quiet day yesterday. We did get a little bit of movement to the downside towards the end of the trading day, but now we're down about 13, 14 handles in the ES. We have a little bit of geopolitical tensions. Turkey shot down a Russian fighter jet, send the markets a little bit lower. There's not a lot of good things out there, guys. I want you to be aware of this. Not that you're not going to just go short the market. That's not the case. But you need to be aware of your surroundings. I'm going to show you the 5 indexes, as we usually do on our Dosh Trader chart. But I want to show you something about under the hood, so to speak. When you see stocks above the 50-day moving average going nowhere, okay? Bullish percent, SPX going nowhere, okay? Holding the highs, which is not a bad thing, but really going nowhere, and breadth of the market declining, that's not a good sign. And then you have market divergence, you throw that on top of it, and you have a dollar that's strong, which is a flight to safety. That's not a good sign as well. So I want you guys to be aware of that, because at any given moment we could actually literally just start to sell off, and I don't want anyone caught being long or buying at these levels. Let the market decide which way this market wants to be headed. Now, we are coming into seasonal strength. However, we've been rallying all of October. We had 3 little down days and 2 huge days just to recover that 3 down days. So, you know, the algorithms are having fun with the stops, the buy stops, the sell stops. So for you as a trader, you need to understand what's going on and dissect what's going on under the hood. Now, we have major market divergence, okay? We have the dollar moving higher. We have the Russell moving lower. Transport's moving lower, which are 2 leaders, and they're not leading. So that's not a good sign for me anyway, that if I was a longer term or swing trader looking to get long stocks, absolutely not. We were looking for some seasonal, little bit of weakness before we get into that seasonal time of the year of buying for the Santa Claus rally. So what's going to happen is this. We're getting into some weakness today. We had a little bit of weakness towards the end of the day. Let's see what happens, you know, maybe Tuesday, Wednesday, and then we had the holiday here in the U.S., Thanksgiving holiday on Thursday, and then half a day on Friday. Let's see how it finishes. If that's the case, after Thanksgiving, we usually have a really kickoff of the Santa Claus rally. If that doesn't happen and we start to roll over, the Santa Claus rally is done, and we're going to be looking at short rallies, okay? That's my game plan for the next couple of weeks. Not to say that I am going to short now, today, or buy today. Absolutely not. I'm taking a neutral stance because I want to let the market tell me which way this market is going to be headed. Now, again, further down the line, I think the markets are in trouble, and I do think the markets have topped in right around April, May of 2015. But again, that's longer-term analysis, and I'll put that out towards the year end, okay? Anyway, spiders, one-day chart, you can see. Now, most of the indexes, if you look at repetitive patterns, are putting in some sort of an M pattern, right? Here's your right leg. Here's your valley. Here's your neckline right around 203. And then now forming that right shoulder of that M. And it's always an M pattern, and we'll be making that lower high from the previous high. And this is more powerful than a double top, because price couldn't even get up here. If price does get up there, it's a different story. But as of right now, it's starting to form this right side. So let's keep an eye on this and see where things go here. A breach below 202, 203, right in this area here, I'd say look out below. I think we're going to go lower and test these lows here. Again, not saying that it will happen at the moment. Just keep an eye on things, okay? IWM, Russell 2000. Big symmetrical triangle coming into an apex here. Again, guys, not looking good. Lower lows and lower highs. This is our secondary leader, and again, not leading. Okay, market divergence is what we have here, okay? Take a look at the transport. Same thing, symmetrical triangle. I mean, now the spiders are challenging the highs, right? Or the S&P or the ES, whatever you look at. And as far as, let's go look at the Dosh Trader chart here. We'll bring it in. As you can see, we're not even close to being above the highs. We're at 148, call it, and we're somewhere north of like 168, 167, and that's just in the ETF. You're probably looking at close to 900 points in the transportation index. So not a good sign here that our 2 main leaders are not leading, okay? Now throw in some of the laggers, which is the diamonds. The diamonds are a lagging index, which was leading. Again, not a good sign. But look what's happening here. M patterns, right? Repetitive patterns. Keep an eye on it, because if it starts to break down, that's another story. Okay, and I want to show you one more thing too before I do that. I mentioned the UUP, which is the dollar ETF. The dollar index itself, the DX, actually hit 100 on Sunday night's trade in the Asian session. Guys, this is the new flight to safety. It's not gold, GLD, but at least for the time being it isn't. Gold is looking much interesting to get long down at these levels. I like to see a break of 100 par or 1,000 in the GC contract. And if that happens, I think you can start nibbling getting long with an average price. Okay? But you have to watch the UUP. This is big. If the UUP starts to break out, it will create havoc throughout worldwide indexes. Okay? Germany, Singapore, you name it, it's going to happen. And if that happens, you're going to see a lot of reshuffling of their portfolios and positions, okay, because of what's going on with the dollar. Very, very important here, guys, okay? All right, lastly is the Qs. Again, I've mentioned many times, I've shown you the weighted average. Be careful here, guys. There's only a bunch that's actually moving this Qs, as well as the XLK. You can look at the XLK, really the same thing. It's the same ETF, heavily weighted on one side by several big cap tech. That's really about it, okay? So just be careful out there. Know what you're trading. It's very important, right? You want to know the index or the instrument you're trading and what is correlated and not correlated to the S&P 500. And that's going to give you some real good cues. I hope it helps. Be careful out there, guys. Use your stops, please. Very important. Have a great day. We'll speak to you tomorrow. Take care.